You are listening to chartingwealth.com for Wednesday, the 13th of September, 2017. We see the S&P 500 up a little bit over the course of the day, a little over 1/3%, about 1/4% we saw the Nasdaq 100 as represented by QQQ, the Qs of the cubes. We see that bonds are down 0.53% for the day, gold up about 1/3%. We're going to jump right into these charts. If you've not already signed up for our mindset training, how do you? Well, you have to be a subscriber at chartingwealth.com to the daily market review. Just go to the website. It's the first thing you encounter, how to sign up to receive our free daily email that includes the video podcast that you are listening to and watching, perhaps. If you're just listening on iTunes, of course, you're getting the audio. We'll explain everything we're talking about. But at the same time, we very much encourage you to sign up and become a subscriber to the daily email that we send out with the daily market review. With that, you receive everything that's of value, the How to Read a Stock Chart video, the layout from freestockcharts.com that we use, the layout itself and instructions on how to sign up for it, plus all three of our worksheets, the trade worksheet that you put down every trade and follow it on that worksheet as a written record of everything you learned throughout the course of the trade, along with the daily market worksheet you fill out every day as you listen to this program, and the weekly market worksheet. You need all that stuff. Plus, you'll get the mindset training. We have a new one coming out today. So we're going to be continuing to put those out. We have 3 to give out to you over the course of the week. If you don't sign up, you're not going to get them in a timely manner. So please do so. What do we see going on in the market? S&P 500, like we said, up 0.34% for the day. When we look at our weekly chart, which is where we always start, we see that we have 3 weeks going on, 3 weeks of up movement. Latest candle topped off right at the top of the Bollinger Band. We see actually the Bollinger Band getting tighter. Why? Well, because we don't have the same amount of volatility. These are volatility bands, and we see volatility decreasing somewhat. Looks like we've got a crossover that could be nearing, but again, don't call your birds before they hatch because we just don't know yet. We still have a pretty negative derivative oscillator. The price percent oscillator has not crossed over on that weekly chart, may be getting ready to do so, may do so by the end of the week. Remember, don't have a crossover until that candle is fully drawn, and the weekly candle won't be fully drawn till the close of the market on Friday. So we will continue to watch there. Now, let's look at what's going on the 2-day chart. We can see that we just finished drawing our latest 2-day candle. The prior candle was pretty much a spinning top. That was on Friday. The 8th is when that candle ended. We had two. We had a doji on the 6th and then a spinning top. And then both of those mean lots of indecision on the 8th. And then a big booming up candle well above the Bollinger Band. And we see the Bollinger Band on the 2-day chart actually expanding with a big wick on top, which means that some of that was pulled back. We see 4 very strong up-moving derivative oscillators, and the price percent oscillator has clicked over, moving up quite strong. What do we see going on the 4-hour chart? We see it continuing to boom 4, which is 2 full days of strong up movement. 3 derivative oscillator candles moving up, representing, of course, a day and a half of movement. So again, we'll continue to pay close attention as to everything that's going on here. If we have a rotation over in the S&P 500 on the weekly chart and we have a jumping in point this next week, that is, again, it won't be called until Friday. You do have to be signed up to receive our text notification service for a weekly vertical crossover. If you are, we will, of course, notify you of that. How do you find out how to sign up? You have to subscribe to the newsletter. Easy to do for free. And I'll give you a little hint. You simply text to the number 33222, one word, Charting Wealth. Let's keep moving. What's going on the Qs? QQQ. Going on 3 weeks of up movement, still derivative oscillators negative, and still the price percent oscillator sliding sideways. Hasn't crossed over yet. Market doesn't want to relinquish its downward momentum at this point. We'll continue to watch. Remember, we're trend followers. We are not forecasters. Why? Because there's more money in trend following than playing with a Ouija board or a crystal ball. That's why we do what we do. What do we see going on the 2-day chart? We see, of course, the 2-day chart bouncing off the red signal line with that up move over the last 2-day candle. It too closed a little outside the Bollinger Band. We'll continue to keep our eye on the prize as far as the 4-hour, well, as far as the 2-day chart goes. Now let's check out the 4-hour chart. What do we see going on there? Well, we see that a lot of up movement in the morning, then some of a peel back in the afternoon. However, 4-hour chart did cross over going up in the afternoon. Now, if there's a big down morning, it could actually pull the blue price percent oscillator back through the red signal line, and it would not look like a crossover ever started. So keep your eye on it. Remember, we again want to try to see where this market is going, particularly on the Nasdaq 100. It has not hit a new high at this point as far as our 4-hour chart goes. Topped out on the 1st of September and has really been just moving down and sideways. So keep your eye on the ball. When we see something developing, we will let you know, but we want to go ahead and chart things as accurately as we can, looking for momentums to follow once they are set. And remember, we're still in the summertime trading zone. It's not until the end of the month, till the 1st of October, that we get into that juicy fall winter trading zone where we have nice clean moves typically that are much easier to track and much easier to make money. There are people who only trade the fall winter trading zone and get out of the market the rest of the year. And if you look at the trades that we did, the practice trades we did over the course of this last year, our most fabulous time was, of course, during the height of the fall-winter trading zone, where we made beautiful trades that worked time and time. In fact, we didn't have to make that many because the length of them was so gorgeous. Okay, let's keep moving through. 2 more charts to look at. TLT, the 20-year bond fund, down 0.53% for the day. We can see that we've got a red spinning top again. Indecision is what that's showing us. We see the price percent oscillator is now sloping down, heading toward the red signal line. A lot of distance to cover. Derivative oscillators lost a little bit of its energy on the weekly chart. On the 2-day chart, we see that it's not crossed over going down yet, but it sure seems to be trying to do that, and it's pushed through the 2-day trend line. Again, if you jumped in back after we had the 2-day vertical crossover, please don't keep staying in and risking all of your money unless you are just bound and determined to see it bounce off the weekly. It may very well do that, but we're getting awfully close. If indeed we do cross over that red signal line, seriously consider getting out of that trade if you've not already. But of course, let's take a look at that 4-hour chart. We saw it cross over going down, and we talked about this all the way back on the 11th. Now we've got 2 full days of strong down movement. And again, blasting through the 2-day trend line and closing on the 4-hour chart below the weekly trend line. Now those are 2 big alarm bells going off. If things turn around and start to move back up, you can always jump back in once things cross back over going up on the 4-hour chart. All things being equal, and the 2-day trend line and the weekly trend line continue in an up position, you can always jump back in. But don't lose all you've gained. And again, that's why we urge you to practice on those trade worksheets so you can keep up with your thought processes and know why you did certain things certain ways at specific times of the year. Okay, lastly, we're looking at gold. What's going on in that weekly chart? Gold had a beautiful run up for weeks. We counted it. This week, however, we've seen a fall off, of course, We've not closed through the weekly trend line yet, but we have a nice steep weekly trend line. We've seen that the price percent oscillator has moved not up at the same angle that it was going up, so that's weakened. The price percent oscillators have actually gained a little energy so far this week. Again, gold up for the day, 0.29%, but we do have a red open box candle, again, taking into consideration the down move from the prior day. So let's keep going through these charts. What do we see going on? The 2-day chart. Again, that 2-day chart reflective of the prior down movement on Monday, September the 11th. We saw that down movement. So what do we have going on? Well, we've cut through the 2-day trend line. Those are some warning bells there. Derivative oscillators losing energy, and the price percent oscillator has actually gone flat, heading just a little bit down. So that's a concern on gold. Of course, our 4-hour chart has long since crossed over going down. That happened at noon on Monday again, and we've seen it continue to move down over the 3 candles, and then at the end of the day, a little bit of up movement on gold as far as our Heikin-Ashi candlesticks goes. Like we said, it was up 0.29% for the day. Derivative oscillators continuing to gain down energy, and that 4-hour chart's rotating over going down. So again, pay attention. You see a crossover going back up in gold, and your 2-day and your weekly are still in confirmed up moves. Of course, you can look to jump back in. That's where we are at the end of the day on Tuesday the 12th as we go into Wednesday the 13th. We love to hear from you. If questions, problems, concerns, let us hear from you. cw@chartingwealth.com. We're also going through your requests and getting the information out to all of you who asked for the training that we have available on the quarterly chart. Of course, that is members only. And of course, to be a member, it's for free. Go to chartingwealth.com, sign up for the daily market review. We'll get all this information to you, plus the new mindset trainings we have coming out this week. God bless, my friends. All the best from the entire team here at chartingwealth.com.